If you're consistently profitable, then this video is not for you. If you're making money at scale, then this video, I have nothing for you. But if you're someone who is failing to have consistent months, this is a technical video, not strategy dependent, but I almost guarantee at the end of it, you're gonna know how to fix your issues. So I'm going to give you an exercise that you can walk away with, you can do it in your own time, and it's going to highlight the discrepancy as to why you are not consistent or you fail to get consistent. You're probably doing a lot of the right things, and there's going to be something right under your nose that we're going to walk through, and I'm going to get straight to the point, and it gives you something to work with. And it might be something so subtle. So I'm really looking forward to this episode. Make sure you've got a pen, a pad, take some notes, and you're going to have some serious value to walk away with. Right, so here we have dollar CAD. I'm going to dive into what I did that helped me figure out how to become consistent and what was holding me back. And it's probably not what you think it is. I was already doing a lot of the right things. I think many traders are also doing a lot of the right things, but you can't help someone that is capping their trades a lot of the time. Let me explain. Imagine that you don't know how far the trades that you win, how far they actually go. So I had a trader come to me, this is like over a year ago, would cap their trades. And it doesn't matter what you cap it at. It could be 4 to 1, 3 to 1, 2 to 1, 1 to 1. And then I asked the question, and this made me realize how many traders don't do this. How far do your winning trades run? I didn't know the answer to it. So then I had a follow-up question as to, so why do you cap those trades? And then his response was, well, I don't want to be greedy. I said, there's a fine line between greed and just you not maximizing on the profit potential of your trades. If, say, for example, you capped your trades at a 4 to 1, and then I said to you, right, so how far do your winners run? You said, right, when they win, they roughly go to around 5%, so I'm capping them at 4%. I'd say fair enough, you're maximizing on most of it without greed getting in there. Where if you're capitalizing on 2 to 1s and they're running for 8%, at what point do you not realize that it's going to skew your edge in the sense of great traders can go through drawdown, and the reason why you stay in a lot of drawdown is because you don't maximize on trades. And I'll give you the exercise really simple at the end. So I'll show you what I did and how I kind of came to this realization many years ago. So we've got dollar CAD here. I would, let's say for example, I'm going to use the 4 hour in this scenario. So let's say I'm looking at an entry model. This was actually a mistrade of mine. So 4 hour, this is more of your advanced swing style trade. There's many ways that I could enter this. But let's say we're going to go 25 pip stop roughly, and I'm looking to target this 4 hour range. What I would do prior, we'll just get the EMA up. Right, so I would do prior, as an example, before anyone jumps on it and thinks that, right, I can trade with an EMA. This is not the point of the video. I'm giving you an example as to what I would do, how I would figure this out. So I would close here. So call this a 2 to 1. This would be an example of a data sample size of a trade. So I'd look back through my trades and go, right, so this is one, and I'd have my screenshot and I'd go, okay, so this trade 2 to 1 tick. It was a winning trade, great, right? So how far do they run? And if I'm targeting the overall range, I would then work something out like this. Let me move this over to the right. I would work something out like this and then realize this was on an unconscious level. Well, my trades, when they're going for 4 to 1 roughly, but I'm capping it at 2 to 1. Why? I'm capping it because I'm overvaluing something that is not actually holding. So let's say, for example, if I went to 10 trades and each one of those trades were 2% or say 3%, and then I was overvaluing a 4 hour 50 EMA, which is what I did at one point. And there's a time and a place when that can work very well. However, I'm telling you what I did. I would then realize they'd run for 4%, 5%, 6%. And then I'd be like, right, well, I am getting into profitable trades, but I seem to be in a lot of drawdown. It's because I'm not letting my winners run. So then that helped me go back through so many positions that I realized, okay, so I'm good at getting into entries. I'm good at getting into these trades, but I'm not letting the winners run. And some of you might say, well, look, I trade a 2 to 1 method. It works. Listen, if you're profitable and you're consistently profitable, you're not blowing funded accounts and you're doing really well, you don't need to be watching this video anyway. But I know statistically speaking, most of you will be in this trap where you believe maybe you're greedy if you hold on to more trades, or you think that there's more risk attached if you hold on to positions, which is actually the opposite. Because if you look through your trades and you realize that most of your 2 to 1s are actually 8 to 1s in terms of potential, then isn't the risk on the other side that there is a risk that if you don't fulfill, not every drop of the orange, I'm not saying squeeze every drop out of greed. What I'm saying is that you're going to this orange and you're just giving it a bit of a squeeze and going, here you go, and not realizing that you could have half of the orange, and if you look through your trades you'd realize there's a potential. Now I don't know the answer to that because I don't know how you trade. I don't know, whoever is watching this as of right now, you could be trading a strategy that is not relevant to that, right? So I'm just giving you a generalization, is that no matter how you trade, no matter how you look at the markets, you need to know how far your winners run. And if I'm saying this to you for the first time and you have got no idea whatsoever, then you've got bigger issues than what I thought. So how would I then approach that moving forward? Well, I'm looking at this trade right now on EuroCAD, and I'm looking for an entry. Now this is more of a 4-hour potential entry or a 1-hour high test entry. Now I would look at that, and let's say years ago I could cap this trade at, let's say, if I capped it at, call it a 2 to 1, it'd roughly be here. It would be an example like this, me randomly capping this trade at 2 to 1, but this is my strategy, right? It'd be like me capping this at 2 to 1 and then not realizing the potential of this trade has much more. So if I go to the 4-hour, I know what I'm dealing with here, and there's a high probability that this will come and take out this low here. Before we move further into this episode, if you haven't already, make sure that you are subscribed to the YouTube channel. The more you invest into the channel, the more the channel invests back into you. We love creating these videos and we really appreciate the love and support. So that's 4.5%. I wouldn't want to cap that trade at a 2 to 1 because I know the range that I'm playing, or I could even go, right, 90% of that, and let's say 3.5 or 3.3. I could set a profit target there, where you might think, well, it's only an extra % here and there. Well, that adds up over the year, and that adds up over the course of when you're trying to, let's say, get out of drawdown, which most traders spend a lot of time in drawdown. They don't realize that if they was to go through their trades, that they're already decent enough. Like, your model might be great, you can get involved in these positions, but if you're constantly staying in drawdown and you're stuck in there and you're not understanding how the potential of your trades can go for a lot more, then you're holding yourself back. Why would you do that? Imagine you explained to your friend, right, this is how I trade. I'm trading a method, you know, I've tested it over time, I've back tested it, it works, even at 2 to 1, 3 to 1. Why are you in drawdown then? And then what if your friend was to ask you and say, those trades that you win on, how much further do they go? And number one, you didn't have the answer to, so you probably feel a bit embarrassed. Or let's say you did know the answer to it and you said to your friend, these, say, call it 4 to 1, right? I don't want you guys to think that I'm targeting, I don't care whether it's 1 to 1, 2 to 1, 3 to 1, or 4 to 1. So let's say that it is a 4 to 1, but you're in drawdown, so you're not making money, or you're constantly blowing accounts. And then you was to say, no, they go for about 8 or 9%. Would you not think for a second that your friend would say to you, well, how comes you don't maximize on them? Well, I just want to get out of the trade. You see how this becomes emotional responses without any logic. If you was to say that 50% of the time they reverse anyway, well, then you could deal with that. But if over 80 or 90% of your winners, when they run for over double what you get out for, there is an issue there. And if you're not consistently profitable, then I've just highlighted it for you. That is how simple of a fix. Now, there is an old saying that a lot of traders will add to losing positions and they won't let their winners run. This has been around since I started learning to trade over 15 years ago. So this behavior doesn't change. And sometimes it's self-inflicted to the point that now you're doing it on purpose. So this is not, you know, your average trader that is getting involved in positions. Let's say they're in a sell here. Not that they would get involved in this exact entry, but let's say they was in this sell. It's not like the markets are getting to, say, 2 to 1 and they're going, right, close, I just want to get out of the market out of just the anxiety that it may reverse and you just want to actualize some gains. This is, no, you're actually deciding and putting in your limits. You're actually deciding to get out of the market there and then still watching the market drop for 7-8%. Now, there's a time and a place. You can always look back in hindsight and go, right, if I would have stayed in that, I would have made 58%. Yes, that's also true. But we're not talking about greed here. We're not talking about unrealistic expectations. We're actually looking at the sample size of your exact positions that you take. So what I want you to go and do, I'm actually looking at euro dollar here as well. This was an aggressive entry earlier that would have resulted in a break even. I missed it anyway, but regardless, worth to note, right? So there was an entry here, would have pulled back, break even, that's fine. However, you have to know how far your winners run. Otherwise, you're always going to be shooting in the dark. And I've met many of traders over the years, and a lot of them fall into this category that do the break-even dance, or a lot of them fall into this category where you feel like you're so close to profitability. You almost feel like you can grab it with both hands, but yet you just go back round into the same position. It feels like you take 2 steps forward, 1 step back, 2 steps forward, 1 step back, and then sometimes you're taking 5 steps back. You're like, right, back to the drawing board again. I know what that feels like for me. I used to make a mistake where it was a 1 hour candle closure, but until I would develop the type of mentality to just wait and be disciplined and stick to my rules, I'd make the same mistake. But that's a video for another day. Essentially, what I want you to do is this. I want you, and I wrote it earlier for you guys that are watching, I want you to go back through, and I'd love for you to comment on this because it would be good to get an overall understanding, and let us know how you trade. You know, what is your system? What is it made up of? Have you actually done this already and you found some interesting data? I'd be curious to know. I want you to come back to the video after you've done this and do this with an open mind, right? This is not, like I said, this is not strategy dependent. At this point, whoever's watching, I haven't got a clue how you trade, but I know this will help because it's helped thousands of other people. Missed trades. I want you to firstly go back through, let's say, last 3 months of data. Do me a favor and figure out how much percentage have you missed out on. And I'm not talking about trades you wouldn't take in the session that you trade or your time zone, like genuine missed trades. So what is the percentage of that discrepancy? Because a lot of the times that you need to realize that there's so much more potential than what you think. And we can get a little bit down in the dumps. We can beat ourselves up, not realizing that you're not consistent because you haven't got a clue what you're doing. You might just not be consistent because you lack preparation. Because when the percentage is there, why are you not capitalizing on it? What's going on in your routine, your behavior, your mentality? It could be a deeper psychological issue, but I just want to keep this technical for now. So before we move further into this episode, I want to touch on something very important that's going to be a key catalyst by you being consistently profitable long term, and it's psychology, but it's about having the right training. If you haven't been aware, for the last couple of years, we've had hundreds of traders go through our program, Rewired. As you can see here, we have Beyond Rewired and our core modules. Now, the core modules is essentially the A to Z to helping you learn how to think calmly under pressure. The end goal is to get you in a position where you're not nervous, you're not reckless, you're not revenge trading, and a whole bunch of other destructive things that are holding you back from getting to the next level. Now, these modules have been intentionally designed to essentially reshape the fabric of your mind and will be the key reason as to why you're not being profitable long term. You might have been someone who's had success here and there. This is going to help the consistency come in at such a high level. We can attribute over 90% of our traders that are on our in-house fund have gone through Rewired. So if you want to learn more about the Rewired program, all the links are in the description. Why are you not getting involved in those gains? So then you can work out the number and then write it down. Then what I want you to do is actually figure out how far do your winners run. Like, I really want to know how far do your winners run, and then look at the difference. So if you say to me, Mark, well, I looked for all those trades, but I'm happy capping it at 2 to 1, 3 to 1, that's fine. If you're consistent, you shouldn't even be watching this video anyway. But there's a high chance you're not consistent. So what I'm saying to you is you're probably already getting into good trades and you're probably already doing well. So half of the battle has already been achieved. Why cap trades that have the potential to go? If you was to look at it and go, look, I've done the analysis, I'm getting out 2 to 1. My trades typically they reverse after that anyway. Well, then well done. You're doing all the right things. I've nothing else for you. If you're doing all the right things, but then you're still not profitable because of that, and then your system is working well, well, then it's a psychological issue that you've not overcome. And more understanding of the markets is not going to help with those psychological issues. Some people are under the impression, or they carry this belief that building the right mental framework will come over time of being a great technical trader. That will achieve 50% of it. But there are thousands of incredible technical traders that fail to have the discipline to stick to their rules. So more technicals is not going to fix that. And I think that's common sense by now. At the end of the day, you are the driver, right? The same person. You could have one car, 2 different drivers. The person who is better at driving will get a different outcome in the exact same car. It's the same thing as traders. You could have the same system. You can have 2 different outcomes because you're 2 different people, 2 different emotions, 2 different levels of IQ, 2 different levels of understanding, 2 different understanding of oneself, of emotional regulation. There are so many variables that could come into that. So you thinking that it's just system alone, I think, is extremely naive. And we are under this impression, I mean, social media does a really good job of thinking you're not good or you're not making money because you don't know this special bit of information. But the reality is everybody has access to this information, but they can't execute on it because they get in their own way themselves. So think about it. Isn't it crazy to think that you have the discipline to cap your trades at 2 to 1, but then you don't have the discipline to stick to your risk management when you're in drawdown on a funded assessment? Do you not see the irony in that? That you'll literally cap the trades that have the potential to go from 2% to 5% on average, but then when things are not going your way, you'll risk 2 or 3%, or you'll break your rules and over risk or full port your account and just reset the whole thing. Do you not see how there is a bigger issue there than what you think? So if you're going to do something, at least just uncap those trades, because if you do that, I bet you would be more consistent just by that. Again, this is my belief. This is my theory. It's probably not going to work on every single strategy, but I've seen it enough times now of traders. They just hold themselves back, and usually it's right under their nose. So if you found this helpful, let me know. I can do more videos like this, but I'll be curious to know the numbers. So go away, look at the trades, look at the data. It could be something that's right under your nose. And if that's the difference, then, just uncap those trades and you probably find there'll be some consistency that flows in.